Welcome everyone to our Ask the Experts webinar today. We appreciate each of you joining. We are grateful to be able to spend the next hour with you. My name is Bill Maloney. I am an Executive Managing Director with Riveron. We're looking forward to engaging with you today on a very important topic, internal controls. And while internal controls isn't in itself a new concept, the idea of governance and considerations on how to design internal controls during COVID and the remote work environment is new. So I'm going to talk to you today about some of that, about the deficiency trends that we are seeing, some of the scenarios that increase the likelihood of a material weakness. And then we also want to talk about remediation strategies and some practical steps that you can take as you identify root causes and implement necessary changes to ensure controls are properly designed and are operating effectively. I'm joined today by three of my colleagues who are experts in these areas, specifically governance, internal control design, and remediation. Mark Cox is a managing director in our New York City office. Matt Farrell is a senior manager in our Chicago office. And Tyler Graffunder is a senior manager in our Minneapolis office. Really looking forward to hearing from each of these experts, their experiences as they review strategies to address internal controls and likely many areas that you are currently challenged with. Before we jump into the content today, a few key reminders. On our website, riveron.com, you can access all of our previous Ask the Experts webinars. A number of key insights on accounting, reporting, operational topics are covered there. And just a heads up that our next webinar will be 2 weeks from today on June 18th. We'll be talking about divestitures on that webinar. So during the webinar today, we'll include 4 polling questions, which must be answered to be eligible for CPE. Please make sure that you enable your pop-ups. If they're disabled, you won't be able to see the questions. They won't come up on the screen. Also, we welcome your questions. There is a Q&A option in Zoom that you can use. We encourage you to do that. Please feel free to use it. We'll try to get to the questions that you pose, but if we don't, we'll make sure to respond to you separately. The webinar evaluation form and the CPE certificate will be emailed to you within a couple of weeks following the webinar, along with access to the deck today and our contact information. Please note that while the on-demand video will be available on our website, the on-demand is not eligible for CPE. So with that, let's hit polling question number 1 and get things started. First polling question says, does your company have any internal control deficiencies that have not been remediated? So straightforward question. A, yes, B, no, or C, not applicable. And Mark, let's get started here as we wait for our participants to respond. And again, just a reminder, make sure your pop-ups are enabled so that you see that question coming up. But Mark, as we jump in here and you jump into control considerations in this environment, for participants on the webinar today, can you just talk a little bit about discussing deficiencies with their broader organizations?
That's a good question, Bill. Thank you. And thank you to the participants for joining the webinar today. Matt, Tyler, and I will touch on some various ways to talk about deficiencies and dig in on some of the trends, as Bill said. But I think really thinking about where the internal controls group or the internal audit group or even the finance group can really have those conversations because they have a broad knowledge of the business, they have a broad understanding of the processes, so they have the relationships in place and the knowledge to be able to convey to the groups the understanding that a deficiency, while there could be an issue or a problem, it can also be an opportunity for an improvement. So I think starting with those deep relationships that have been formed because the knowledge and the broader understanding of the business can really help speak their language and help them understand how there can be an improvement opportunity there. But that's a good question, Bill. Thank you. Yeah, so taking a look at these polling results, you know, that this is not unexpected to see. There's a pretty big split here, and actually there's a good portion of the group that has deficiencies that have not been remediated. This is deficiencies, as I said, they can be common, they can be throughout an organization, and really They don't have to be significant deficiencies or material weaknesses, but this is not unexpected for me. So I think as we jump into the slides here, we'll start to discuss some of the overarching considerations specific to internal controls during this COVID-19 crisis. These are by no means all-inclusive. These are just some that have come up in conversations with our clients that we felt that were relevant to just dig into today. So the first item we'll dig into naturally is risk assessment. And depending on when your organization takes a look at their risk assessment, there could be, this could be a really good opportunity to refine that process. But I challenge everyone to revisit that at this point. Even if you've just done it, because of how quickly things are moving and how quickly COVID really changed the way we work and the way business is flowing right now, revisiting risk assessments is an absolute must right now. And what that looks like is you may have risks in your risk inventory that cover what's going on right now, but they probably were not at the likelihood and the impact that it's had on your business. So take a step back and really discuss with your organization, the broader organization, a cross-functional group, to be able to understand how has that impact and likelihood changed. I'll use a couple of examples here. Let's think of liquidity risk. Liquidity risk was probably in most companies' risk inventory, but it may not have had a high likelihood of getting to a situation where liquidity was a serious problem. But because of the strain just on the financial systems and the supply chains, this is going to be a risk that I think might be elevated for a lot more companies at this point. And there were a lot of entities that drew heavily on their line of credit and had to make extensive cost-cutting measures. So that liquidity risk is now very top of mind when maybe it wasn't previously. So that's just one example there of like revisiting that piece. I do also challenge to take a look at your fraud risks. Anytime there are new opportunities or additional pressures as there are now, I think revisiting your fraud risks would be something that should be top of mind. It's a continually fluid, changing environment. And so being ahead of these, given some of the opportunities that are pressures that have brought themselves up, are very important. And one more point on risk assessments is, if you don't have a continuous risk assessment process, if you just do it on a periodic basis and revisit it, I challenge you to take a look at what a continuous risk assessment process could look like for you. That is a pretty big change if you don't go through that, but always looking at those risks through the lens of a cross-functional group may be something that you want to institute as part of your internal control environment, instead of just revisiting that risk assessment on an annual or quarterly basis. Another item, which, obviously we're on a webinar right now, is this rapid adoption of remote work. Many states during COVID-19 were required to close non-essential businesses. And so that required a lot of companies to push into remote working arrangements. And some entities weren't prepared for that, while others were, but I don't think anyone was really prepared for the amount and the longevity of this remote work arrangement. And so I think this rapid adoption really brings some new considerations for all of us, specifically around the IT general controls, taking a look at those new systems and programs that maybe you instituted or you're using more than you have before. How are you safeguarding your company's data and the data privacy of your company's data, as well as your customers' data that you have? Have you evaluated those systems on a thorough enough basis to be able to understand the safeguards that are in place? Another item that I think we should really all look at, and a lot of companies already had this in place, is the use of like a virtual private network. A lot of companies have people working from home on their home network, and they don't have a virtual private network in place. And so there are different considerations when someone's using a home Wi-Fi as compared to using at the company, obviously. So thinking about rolling out a virtual private network that meets all of your security standards to protect that data would be something really push for. I think there's a little bit of a silver lining here. There's some really good tools out there for remote work and automation. And so some of that silver lining is now more people that maybe weren't using those tools within your organization are adopting them. And so I think this could be used as an opportunity to help the broader organization understand the efficiencies that can be gained with using some of these remote work and automation tools. I'll use a couple of specific examples. Microsoft Teams is a really good one where you can edit a document, and it can be that one document that an entire group can edit, and you maintain version control. And they're similar with a Google Docs or other type of systems out there. So like version control may have been an issue when you're just emailing out different documents. But looking at it from that perspective, that's really efficient, that you have one document that everyone can work in and have a single version. That's really important, especially in internal control space where document control and version control is very important. And last thing I'll touch on here is, looking at those manual controls that you have and then comparing that to your systems that you have. Many entities and some of our clients, we've seen this where we do some optimization work with our technology practice is they've instituted or implemented a new system or ERP or risk and governance tool, but they only put in a certain module and they didn't necessarily implement to the full capabilities. So compare your manual controls to your ERPs and your risk and governance tools and see if you have access to modules that you could implement to ease some of those manual controls. If you could get to more of that automation, that's going to lighten that load in terms of internal controls. So there's just a couple of the key points that we've really seen is the risk assessment and a remote work adoption. But as we move to the next slide, I think we'll discuss some additional factors.
Hey, Mark, before we hit that next slide, just a question on the you mentioned revisiting the risk assessments. I think it's worth talking about just a little bit more on that piece. We've got, obviously risk assessments may not have been looked at here recently, or may have been a while. May have some participants who weren't there at their company the last time a risk assessment was done. What are some practical ways that our participants can start that process?
That's a good question, Bill, and I kind of briefly touched on it, but I'll expand on that point. I think you really have to start from a place of a cross-functional group that really captures your organization. So think, we mentioned liquidity risk earlier. Obviously Treasury is going to have a much different look, and even more people are going to be focused on that liquidity risk piece of it. But if you go over and talk to your procurement team, there's going to be a large push towards supply chain risk, especially if you have a global supply chain that was significantly disrupted. So having those different perspectives around risk and that cross-functional group is really going to be the place to start. And I think Matt and Tyler may touch on this even more, but that's really where I would start, is that cross-functional group. But that's a good question. Thank you, Bill. So as we move, we discussed some of the previous items. There's a few more considerations to think about during the COVID-19 crisis. And really one of the unfortunate parts of the COVID-19 is staff reductions. Across industries, many businesses have been affected by this, whether it's permanent layoffs or temporary furloughs. And this can have an effect on your control environment, definitely. And in many cases, there's the same amount or more work for less people. So you're looking at a leaner organization in general, but these internal controls have to be maintained during this time. So I think just a couple of points is really taking a look at your segregation of duties. At the first place I'd start. That's not something that that's going to be looked at as part of these staff reductions. So it's an after the fact review. Do you have the right mitigating controls in place to cover some of these new SOD issues you might have because of the leaner organization? Taking a look at roles within systems of the new people who may be preparers, reviewers that had to change roles or pick up new roles. And another thing I would think about is when there's more work, sometimes the thing that falls behind is review. And precision of review is a key part of your control environment. Do you have the right people in place? Because some of these changes in this leaner organization to review at the precise enough level that's prescribed in your control wording. So taking a look at your controls, do you need to reword controls? Do you need to point to new mitigating controls? I think at a minimum, start with that SOD analysis and understand if there are new issues that need to be looked at. Couple more items to look at here, and I'm going to group these together when I'm speaking just because I think some of this is going to overlap. Really some of your technical accounting and reporting considerations, as well as your one-time or non-recurring transactions. So from the accounting and reporting side, you're going to have some transactions that you may have had documented in processes such as, you know, a debt modification as an example. You might have had that covered in a treasury process, but it's so few and far in between. How are you evaluating that? Did you have the right people involved in the process before you entered the transaction, so you're not having to take a look at it after the fact and scramble? I mean, a lot of companies were moving very quickly in this COVID-19 because it came on so quickly. And so having the right people in place to review those changes, which can have definitely a material impact, are very important. Impairment analyses. Most companies have impairment policies when they look at it, you know, what triggers, but there were new triggers maybe, and just some macroeconomic triggers. Take a fresh look at those impairment processes, as well as you probably had to prepare some valuations, some of those discounted and undiscounted for your tangible and intangible assets. So take a look at completeness and accuracy of that valuation and really challenge your forward looking, because there's a lot of uncertainty. But I think from what we've seen, that uncertainty can't be used as a crutch to say this is inestimable at this time. You have to have some understanding of what the future holds and how that affects your impairment analysis. So really looking at completeness and accuracy, which I think, you know, Matt and Tyler will discuss later. And then there's some new updates to disclosures. I mean, there were some required COVID-19 disclosures of risk factors and how this affects your business, and discussing liquidity. Could even have the impact of having to disclose some going concern issues, which is more of a one-time and non-recurring piece of it. So making sure throughout that technical accounting reporting process, you have the people in place to review these complex transactions in real time and maintaining contemporaneous documentation to make sure that when someone is testing that control or that process, you have it in place at that time. Some of the one-time and non-recurring items we've seen come up is the tax impact, or I'll say the tax relief that the CARES Act allowed for. Do you have that? That's a one-time and non-recurring thing that maybe wasn't built in. So do you have the right compliance team? Do you have the legal team looking at what you're doing from a tax relief standpoint versus that CARES Act to ensure that you're maintaining documentation and review of those transactions, that they're going to have a material effect? And then that last piece, which I discussed briefly, is the going concern analysis. Again, an unfortunate part of this, but do you have everything in place for your company and the right people reviewing to really push forward with a going concern analysis when it's asked for? Could be something to go ahead and get in front of in case it's asked for briefly. So again, you know, touching on all of these are just a few of the considerations, not by any means all inclusive, but they've been relevant for our clients during this COVID-19. So I'm going to turn it back over to Bill for our next polling question.
Thanks, Mark. We are at polling question number 2. Which of these is most relevant for your company's internal control environment during the COVID-19 crisis? A, revisiting risk assessments. B, redesign or addition of controls. C, adoption of new technology. D, other. Or E, not applicable. So again, should see the pop-up. Go ahead and respond to that. And while we maybe just make one comment and ask a question. One, just to clarify, I think you mentioned earlier MS Teams, Mark, and while MS Teams was certainly around before this, it's now been much more widely and effectively used, and certainly the benefits of MS Teams will outlive our current COVID-19 environment. And then related to that, you mentioned potentially using this time to evaluate and optimize current technologies to increase efficiencies. Maybe just talk a little bit more about that, Mark, why this is a good time for companies to think about these different technologies in the internal control space.
Yeah, I think that's a great question, and I'll give 2 points. So the first point is I really think it's a good time because there are more people embracing change, and if you can get change is already hard enough, but if you have more people embracing it, then you may be able to get individuals on board with change that maybe were not previously. So I think just more change in that change management aspect of it. The second thing is I'll give a very practical example using Zoom, which we are using now. Zoom has the ability to record meetings. So if let's use the disclosure committee as an example, where there's a disclosure committee talking and someone's usually in the background taking meeting minutes to evidence that happened. Well, now you can just hit record on Zoom and have that available so that you have that information and it's contemporaneous as it's happening instead of having to go back and, it's hard to take notes that quickly sometimes. So there's just practical examples, and I think just embracing that change in general. But great question, Bill. Thank you. Super.
Excellent. All right. Thanks very much. Got quite a bit of variation here in some of these responses, but revisiting risk assessments seems to be at the top of the list, but certainly those other ones aren't far behind at all. Matt, let's bring you into the discussion here and start talking some about deficiency trends and what we are seeing there.
All right. Thanks, Bill. So Mark kind of got us started here by talking through some of the new challenges that could give rise to control issues in this COVID landscape. What I want to do is take a little bit of a step back and consider the common drivers of material weaknesses prior to the onset of the COVID environment. After all, those who do not remember the past are condemned to repeat their mistakes. And I know what you're thinking. I'm quoting 19th century philosophers and giving a presentation on internal control snore. Well, bear with me. I've included some charts, some colorful charts and some pictures to keep everyone engaged. So get a stretch, splash some water on your face. We're going to get through this together. So, taking a look at, some of these drivers of material weakness, this is just some data that we've gleaned from our clientele over the last several years. We're consistently helping clients, remediate material weaknesses. So we've seen a lot, boots on the ground, seen a lot of what drives these. And, I think it's important to, have an understanding of, what has driven material weakness at organizations prior to the onset of the COVID landscape. Ultimately, these are the areas that are most fragile at organizations and quite frankly are prone to break, when there's uncertainty that presents itself. In this particular case, it's manifested in, a global pandemic that has us all sheltered in place. And so, I think the important thing to think about is COVID is unlike anything we've ever seen before. That said, there's nothing new about these issues that plague control environments. So through the next couple slides, I'm going to drill into a couple of these common drivers and ultimately kind of apply the lens of context of the COVID landscape and how that could potentially exacerbate some of these common issues that organizations face. So the first one I want to talk about, I'm going to touch on pretty quickly here, simply because it's pretty abundantly obvious how the COVID landscape will exacerbate this challenge. And, turnover of accounting and finance personnel, needless to say with, the shelter in place, restrictions and, just the taper off in demand across almost every industry, there's been a need to, cost control, and most companies' biggest cost is their salary outlay. And so, unfortunately, there's been a great deal of reduction in force, spanning virtually every industry. And so this is likely applicable to almost every organization out there. No organization was striving to, have residual capacity anyway. Most organizations strive to run lean, and so when you lose a personnel, especially without any real warning or foresight, it can really be a challenge to ensure that those responsibilities that were once performed by that individual that's no longer with the organization have been transitioned to someone new. And the same thought has to be applied to through the lens of controls. So were any of the impacted employees control owners? Have we considered who those responsibilities are going to transition to? And then furthermore, with wearing that new hat, does that present a segregation of duties issue? And finally, have we considered the SOD impact of assigning that new task to that individual? Mark touched on it a little bit earlier, but as we assign new responsibilities and people wear new hats, we need to look at how that impacts our excess risk, and quite frankly, develop compensating controls to get that risk down to a more tolerable level.
So Matt, let's this is an important point here. Clearly, there's been a number of risks that have been seen in the marketplace and that companies are experiencing. And imagine, right now it's imperative for organizations to do more with less, or at least as much as they've been doing with less. How have we seen organizations balance the importance of internal controls with what is seemingly an endless list of other competing priorities now?
Yeah, that's a great question, Bill. And quite frankly, it's one we've been helping our clients with, long before COVID came along. There's a couple of tangible things that we can do in our organizations. First and foremost is expressing that importance of maintaining a robust control environment from the very top levels of the organization. I know Tyler's gonna kind of touch on this in greater detail in his section, so I won't go too deep on it, but effective tone at the top can really signal to control owners the importance of a strong control environment. And furthermore, what I always like to tell my clients is, the best way to drive action is with incentives. To the extent that you can build verbiage or goals into, an annual performance kind of rating system or goals, MBOs, build in metrics that drive the action that we want to see out of our employees. It'll really help, kind of ensure that everyone is aligned and towing rope in the same direction. But yeah, that's a great question, Bill. It's easier said than done. So jumping into the next section here, implementing new technology and applications here. Mark touched on this, Zoom, teleconferencing. We're on a Zoom call right now, the virtual private networks with everyone kind of in remote locations, having to access the server and at the same time maintaining the information security of that server is imperative. ITGCs can really bring down the ship pervasively and prevent auditors from placing any reliance on data that comes out of the system. So that's really something that needs to be have a heightened focus on, especially noting the swift implementation that was required for a lot of these applications and softwares. So just being aware of the change management controls that need to be in place when we're implementing new applications, and then furthermore data integrity. Ensuring that if an application is going to, we're going to load data into this application, we need to make sure that the data we're loading in has integrity. At the end of the day, it's garbage in, garbage out. You can spend all this money on this great application with all the bells and whistles, but if you're still loading the same lousy data that we had before, we're gonna face the same challenges. So, these are some of the the considerations that you need to look at when we're implementing new applications and technologies. And then furthermore, if there's access that's provisioned in those in those softwares, we need to aggregate that into our overall access risk and SOD analysis. So kind of similar, business process changes don't necessarily always have to have technology embedded in them. But, you know, processes that we kind of took for granted executing in, you know, an office environment. You know, we may circulate a hard copy invoice for departmental approval, signaling okay to pay, and then that gets dropped in the AP manager's inbox and for inclusion in the next payment run. Needless to say, that's not going to happen when we're all, you know, in our respective home offices. And so, you know, I think it's important to look at how processes could change, and not just from a patch fix perspective. You know, I think people have differing perspectives on, you know, when we're going to come out the other side of COVID. You know, I think there's a great deal of uncertainty, and so there's hesitation. You know, if we come out of this a month from now and spending money to, you know, implement a patch fix. So I think it's important to, you know, Mark touched on this briefly, but it's important to, you know, look through the longer term lens and consider how, you know, even if we do come out the other side of this, when we do come out the other side of this, how will these changes help drive efficiencies, you know, post-COVID? So as we move through the next couple here, these are, I put these on the second slide because they're just not quite as applicable at the present juncture. You know, I know business combinations and divestitures right now, I know deal flows have really slowed significantly. You know, with all the uncertainty, there's just everything's kind of been put on pause. You know, I will say, I imagine that will turn and turn with a vengeance. You know, I think with financial distress comes a great deal of consolidation in industries, and whether that means that we're divesting a laggard part of our business, or, you know, we're seeking opportunities to, you know, jump in and acquire, you know, something that will be 2 + 2 = 5 for us. There's always a great deal of complexity that stems from any sort of event of that nature. You know, Mark started touching a little bit on some of those debt mods, you know, hedging, derivative contracts. You know, if you're acquiring a foreign entity, you know, adjusting to US GAAP, there's all different types of complexities that acquisition or divestiture gives rise to. You know, there's diligence. You know, we do financial diligence, we do legal diligence, and anytime we're going through these. And so I think it's important for companies to think more proactively about, you know, the accounting angles, the controls or potential misstatements that could stem from these things, and incorporate that into our diligence process up front. And then finally, completeness and accuracy. You know, this is something that's really kind of become more and more common over the last 10 years. I think 10 years ago, you know, nobody really talked about it. You know, the auditors weren't harping on it. And increasingly over the last several years, it's just become, you know, the front of the auditors' minds, and anyone who's dealt with them tends to understand as well the challenges associated. So things to think about. You know, if we're getting a canned report out of our ERP system, you know, that's pretty straightforward. You know, we have to validate that it's pulling from the appropriate data tables. It's more when we're doing manual calculations. If we're querying data out of our system, and then we're doing some manual procedures in Excel, you know, we need to document what those manual procedures are, with the intention of, you know, allowing the auditors to come in and reperform what we did, and ultimately get to the number that we got to that supports that key control. I know I skipped over adoption of new accounting standards. I'm going to touch on it real quick. 606 and 842 were front of mind the last couple of years. You know, if you're a public company and you haven't gotten those implemented yet, just tisk, you're a little behind. Private companies may still have some time, but, you know, I think what I wanted to touch on here is it goes beyond the adoption point. You know, it's important to think about, you know, what are the key inputs that influence how we classify a material revenue stream in the case of 606, or, you know, how we build our inventory of leases in the case of 842, and ensuring we have controls to monitor those inputs that could, you know, tweak our classification, and ad hoc controls to identify that to signal when we need to make an accounting adjustment. So I think that's what I wanted to touch on there. So, you know, let's talk about the elephant in the room here. You know, I promised a picture. So I want to talk about these questions, you know, that we should be asking ourselves at our organizations. And, you know, it's not a question of who should be asking them. You're the leaders of your organization. You're here. You know, if your leaders aren't asking these questions, bring them to them. You know, be proactive, because at the end of the day, the earlier we can get out in front of this, the sooner we can implement remediation plans or adjust the design accordingly, and you know, kind of prevent the surprises come year end. So some of these questions we should be asking ourselves: are the common drivers that we just discussed impacting your business? You know, have we refreshed our annual risk assessment? Are we taking proactive measures to address the changing risk outlays at our organizations? Have we considered accelerating interim testing plans? You know, proactively identifying where deficiencies may have arisen can get us, you know, the ball rolling on remediation before the auditors, you know, kind of play gotcha. And then the impact of reduction in force, you know, both on our control environment, on our access risk outlay. You know, these are the questions that we should be asking ourselves at our organizations. You know, if we're doing so already, outstanding. You know, if not, well, we're glad you're here. You know, in a moment, Tyler's going to talk you through some of the tips and tricks on how to best approach remediating deficiencies that may have arisen. And listen, you know, the anxiety stemming from feeling like we have to monitor everything under the sun is enough to make anyone materially weak. You know, but a proactive, targeted approach, focusing on the common drivers of deficiencies, can really help ensure that those words stay out of our audit reports. All right, I can feel the virtual tomatoes flying my way. So with that, I'm going to turn it over to Bill for the next polling question.
Very good. Thanks, Matt. Polling question number 3. Of the common deficiencies discussed, which is of greatest concern at your organization? A, turnover of key personnel. B, information security. C, monitoring controls. Or D, other. And if it happens to be other, certainly welcome you to include your responses in the Q&A section, and we can perhaps address those when we get to the Q&A part of the meeting today. But while we're waiting for the responses, Matt, you know, certainly there's some controls that carry more significance than others. If we were, you know, to proactively focus on ensuring effective execution, what would be those you know, 1, 2, or 3 controls you'd say, hey, these are most important and ones that you focus on?
Wow, yeah, no, that's a great question, Bill, and quite frankly, as you alluded to, not all controls are created equal. You know, 2 business process controls kind of jump to mind immediately, and those would be, you know, dual controls around journal entries, and then also, you know, kind of independent reviewer and preparer of account reconciliations. And really, the reason for those being so imperative is, you know, they're pervasive across every single key account, every account in your organization. And so, you know, if a business process control breaks down in a given cycle, you can almost always point to the journal entry control and the account reconciliation control as a compensating control, you know, regardless of the area that the deficiency, you know, may have stemmed from. You know, it would behoove me not to mention ITGCs as well. You know, that's a whole different conversation that we don't necessarily have the time for today. But, you know, if it's perceived that your ITGCs are insufficient, you know, let's say surrounding your ERP system, the auditors won't rely on any data that comes out of it. And in most cases, business process controls rely on data that comes out of your ERP. So that's where I dedicate my focus.
Very good. Excellent. Well, perhaps not surprisingly, got quite a bit of folks that are concerned about turnover of key personnel and monitoring controls. Information security a little bit lower, and we'll see what types of responses we received on the other side in terms of other areas that folks are concerned with. Tyler, let's transition over to you and have a discussion on remediation strategies that folks can employ in terms of addressing their deficiencies.
Yeah, great. Thank you, Bill, and also Matt for that generous intro. And good afternoon, everyone else. Now that we've covered control considerations during this pandemic and some of the current deficiency trends that we are starting to see, I'm now going to transition the webinar to focus on strategies and considerations to help make your remediation efforts a success. So when first looking at this slide, there's obviously a lot to digest here. Therefore, I'm I'm going to walk through each quadrant separately and try to connect some of the COVID considerations that Mark and Matt had previously laid out. So starting in the top left corner, the first step in any remediation effort is to identify the key players and determine who has stake in the end results. Once this list of stakeholders is generated, it is important to maintain consistent communication and reporting to ensure everyone remains up to speed on the status of the project. When thinking about our current environment and the amount of people working in isolation, communications with stakeholders needs to be intentional and focused. In a pre-COVID world, these brief updates and touch points would come from in-person interactions at the office, but as you all are aware, that is not possible for most of us currently. And with that, I wanted to quickly list off a few of the key stakeholders that we ensure to keep up to speed in any remediation work that we do. And those are the shareholders, the C-suite, the controller, the SOX team, both internal and external audits, and anyone else involved in the day-to-day functions of the process being remediated. And this point is probably obvious, but stakeholder communication should be tailored to the respective audience and given their exposure to the deficiency. So moving clockwise and over to the top right corner, having unclear ownership or responsibility dispersed too widely is oftentimes a hindrance to the success of the remediation. Before kicking off a project of this magnitude, it needs to be made clear who's in charge and the significance of the outcome of the project. You heard previously from Matt as he touched on this, but one way I have seen this done successfully at clients is by incorporating the outcome of the remediation into the annual performance goals of the employees, both responsible for the management and the execution of the project. In addition, bandwidth transparency becomes more important in this remote working world. As Mark previously alluded to, people are getting stretched very thin with all these staff reductions going on around us. And to ensure adequate bandwidth, each remaining team member needs to lay out all of their day-to-day activities and give an estimated time it takes to complete each of them. From there, the project leader needs to shuffle priorities to make time available to bring, or if that time is not available, they need to think about bringing in additional resources to ensure that there's full dedication to the remediation project. And now jumping down to the bottom right corner and really getting into the meat of the work, it is important to take a step back and ensure the remediation fits into the overall process flow. At this point, it is easy to get tunnel vision and focus on identifying and fixing only the isolated problem. This approach can easily result in missing the true root cause, as the issue may have initiated in another phase of the overall process. And to mitigate this risk, a best practice we use is to include all parties involved in the process, as Mark touched on earlier in this conversation. And we like to walk through the cycle from start to finish with everybody included to ensure there are no stones left unturned and everyone at the end of it is on the same page. In addition to a robust root cause analysis, we also advise on a full refresh of the company's risk assessment. We all just saw firsthand how new risks can quickly arise and become a top priority in any, and it seems like every organization. And these new risks and changes need to be quickly assessed in order to develop a good control coverage to mitigate the company's exposure going forward. So moving on to the final section of the slide, implementation and training. This is oftentimes overlooked simply due to the lack of technicality required. However, we see this being the common point of delay or failure. Having a hiccup in this stage poses a huge risk to the organization, as this is the final step and usually doesn't have much runway if the fix is done wrong. So to avoid this, it is important to include the control owners and day-to-day users in each step of the process, as they will be the ones that are the ultimate end users executing the steps needed to ensure ongoing success. Again, I want to frame this section in the scope of our current environment. With the inability to do in-person trainings, there needs to be robust desktop procedures and even user manuals created to ensure control owners know exactly what they need to do.
So Tyler, clearly a critical step there, and you talk about control owners and even there's a change management aspect here in terms of, adopting these newly created procedures. What steps or tools have you seen used in the past to help companies or to specifically help control owners with that aspect of it?
Yeah, great question, Bill. In our experience assisting clients through remediations and various control implementations, we like to take this phase or this step one step further than your traditional desktop procedures that people are normally used to. This is where the rubber meets the road, and we never want to see a hiccup at this point of the project. So to ensure success, we build out control execution templates, or CETs as we call them. If there are any clients listening, they are familiar with that terminology. But for any new control added or changed, this document will give the control owner a foolproof plan to execute every minute detail needed to ensure the control operates at 100% effectiveness. Having these templates ready at the first time the control owner executes the control is crucial. And what we have seen with our clients is that the control owners likely have a few questions during their first attempt, but usually are fully independent going forward. So this quick adoption creates efficiencies for the organization, but it also gives the leaders comfort knowing that all the money and time they just spent on their implementation has a robust plan that'll live through once the remediation team is done and gone. I could go on forever talking about implementations, but hopefully that brief answer was sufficient given our time. So now that we've covered all four of these at a high level, I want to move on to some more practical monitoring that'll help in the midst of your remediations. So similar to the previous slide, we have a lot to unpack here with this one. For ease, I'm going to walk through each column from left to right to help keep everyone on the same topic. So as we briefly covered on the previous slide, it is important to keep the stakeholders up to speed on progress. With that said, an oftentimes forgotten stakeholder in the remediation efforts are the investors or other SEC filing users. As progress is made, it is important to disclose detailed updates in your SEC filings so that investors can understand where you are currently and what the path is going forward. We want to ensure that there are no significant surprises when it comes to the timing of the strategy. Another key stakeholder to keep in the loop are your external auditors. They will have opinions on the overall plan, and it is key to get their buy-in up front to avoid costly rework in the final stages. Depending on your relationship with your external auditors, this one can oftentimes get tough. You don't want to share too much, but you also need their buy-in. So we advise including them in the upfront high-level process design meetings, but away from the more granular day-to-day task changes. So now transitioning to the middle column, in order to keep the stakeholders up to speed, there needs to be key milestones that are transparent to all parties and can be tracked in detail to assess progress. Having these milestones built out into a robust step plan will also help the remediation team get quick wins, which will continue to drive the momentum of the project forward. And again, similar to what Mark touched on, this is a good time to introduce technology. And as he said, and to reiterate, Microsoft Teams and Google Docs at this point will allow the team working on the remediation project to have real-time insights as to the progress of the overall plan and make edits simultaneously to any documents used. This is especially necessary while working from home and not sitting directly across from the team. And jumping to the last column, real-time testing is often bypassed simply due to lack of time or bandwidth, which could certainly be the issue right now with the reduced workforce. But skipping this phase can result in significant rework down the line. Independent eyes are always a positive add. As progress milestones are met, it is a good idea to introduce independent management testers and even user acceptance testers to ensure the designs are working as intended. Having trial runs at different stages will also ease the adoption of the new process, as the day-to-day team will already have background knowledge of what needs to be done when it's time to execute. So as previously mentioned, all of these discussion points are impacted by our current COVID environment, and I want to spend the next part here just talking through some of those at a high level. So as you begin remediation efforts, or maybe already in the middle of a project, it is worth taking a step back to consider how COVID is impacting us right now and how this could shape the future working environment. As more companies are accepting the work from home transition, and some are even extending it indefinitely, it is important to critically think about the use of technology. The deficiency being remediated might not have been caused by technology or a lack of technology, but now, in the middle of a required process change, is a good time to transition archaic pieces of a process to a technology that can be used while everyone is working remote. In addition to technology updates, it is critical during these remote working times to over-communicate. We have mentioned this one a handful of times, but it gets back to all of the lost touch points we took for granted while working physically in the office location with all of our close contacts. In this isolation period, you need to be intentional about communicating with all of your key colleagues and ensuring everyone is up to speed and knows what needs to be done in order to have a successful remediation. And last on this slide, which ties in very well with the top technology line, are process efficiencies. Any changes made as part of the remediation effort needs to have efficiencies at the top of the priority list. Companies are running more lean and to-do lists are filling up. Adding more work as part of a remediation will only increase the risk of failure. Consider the stresses people are under and try to streamline any new tasks that are created to ensure there are no bandwidth issues or quality issues for that matter. So one quick example here would be assessing the frequency of the control and maybe trying to change it from a monthly control to a quarterly if the risk allows. This will obviously free up the control user's time, being that they only have to execute it once a quarter now. Again, these are simple in concept, but if done with diligence, they will create a positive impact on your organization. And now I'm going to pass it back to Bill for our fourth and final polling question.
Super. Great. Good discussion. Thanks, Tyler. Polling question number 4. Which of the areas below have been the most difficult to overcome when remediating a deficiency? A, adoption of new procedures. B, technology enhancements. C, tone at the top. And D, meeting remediation deadlines. So go ahead and take a minute to provide responses there. And Tyler, as we wait for the answers to that final polling question, see tone at the top listed here. That's a phrase that we hear quite a bit. It's thrown around a lot. At what point of the process does this, really become the most important?
Yeah, great question, Bill. And we heard Matt touch on this a little bit earlier too, but tone at the top isn't just a kickoff meeting run by the CFO at the onset of your remediation project, but rather successes are made when there are day-to-day demonstrations of the importance of the outcome of the remediation. I've seen many companies with a culture of SOX merely being added work with little value or return on investment. And this message was driven from the organization's top leaders. And sadly, these are the companies that usually end up having the most deficiencies. So with that said, having buy-in from the leaders is key, and having it present at the beginning of the project and consistent throughout each phase will ensure that everyone also buys in to that extent as well.
Great. Okay, well, looking at those results, adoption of new procedures, clearly the front runner there at 43% as being the one that seems to be most challenging for our participants. Why don't we try to get, we've got a couple minutes here, why don't we try to get in some Q&A, a question or two that we have here. Matt, I'm going to direct this first one to you, which is around organizations leveraging technology and what you've seen there and how companies have used that to ensure appropriate monitoring of control environment compliance.
Yeah, so we touched a little bit on video conferencing applications and even virtual private networks, but even beyond that, I know I've read a lot about kind of productivity tools that companies are using to monitor how their employees are working when they're not necessarily in the office. I've also I'm constantly kind of got my finger on the pulse of fraud risks, and the extent to which we've seen an uptick in phishing attacks has been really staggering. I'm sure that everyone on this call has probably experienced this in some way, shape, or form, but it seems as though they're kind of taking advantage of the fact that everything is done via email now, and there's no kind of validation in person. And so I think it's important to consider how the risks are heightened in this environment in certain areas, and just ensuring that we have the appropriate information security outlays to protect against that. And even when it comes down to we're talking on intellectual property on these video calls. We don't want that slipping into the hands of our competitors. And so understanding how these new applications and existing ones, how we're controlling our information security is really imperative, both from a controls perspective and a strategic perspective. But yeah, that's a great question.
Good. Yeah, and I certainly can relate to the phishing side of it and what I've seen there. Tyler, a question for you. Do you have an example of a specific control that has been impacted by remote work, and even better, perhaps ways to work through that?
Yeah, another good question, Bill. I'm going to use an example here to answer this one. I had a recent public client that was still printing out their reconciliation lead sheets, believe it or not, to have the reviewer physically signed and approve. Obviously, where we're at with most everyone working from home, it's really tough to deliver paper documents to get that signed. So after a quick discussion with the external auditors and before assisting them with an ultimate implementation of Blackline, we were able to agree that a time-stamped email of approval would suffice for the time being. So again, this is simple in nature, but the change ultimately saved the client a lot of time, and also the possibility of a deficiency due to the lack of approval. And I sort of answered your second piece of the question within that, so I'll touch on that again. But the ultimate end result here, as most companies should think about, is how do we get technology involved to make this much easier? And with this client, they're going to end up using Blackline in the future, which will house both journal entry workflows, reconciliations, and then both the preparer and approver signatures to show that these were complete to satisfy the controls. So hopefully that answered your question.
Yep.
Hey,
yeah,
Tyler, if I could just jump in here, the one thing I would caution, if we're giving approval via email, make sure what we're approving is attached to that email. That'll often trip us up. If it's just an approved and the auditor can't see what was approved, then that can often trip us up. So just something to consider as well. Sorry to cut you off, Bill.
No, good point, man.
No, that's good. Yeah. Thanks very much for that. Appreciate it. And thank you to all of our participants for joining today. We really appreciate it. In closing, let me just highlight for you some of our recent thought leadership related to the topics we discussed today. You'll see a couple there on the screen around material weaknesses and deficiencies generally, and how to improve governance. So you'll find those on our website. We really appreciate being able to spend the hour with you. We look forward to meeting with you again in a couple of weeks to talk with our experts about divestitures and how to successfully navigate that landscape. So keep an eye out for that invitation and enjoy the rest of your day. Thank you.